Alright folks, welcome to the video. Anthony Special here with Special Analysis. Going to recap our live session this morning. Going to talk about the trade that I personally took. We're going to talk about the crude oil inventory report. We're also going to talk about the opportunity we identified on the Nasdaq and S&P pre-market as well. So I'll kind of kick off with what I did for myself pre-market. We'll talk about that very quickly. And then we'll kind of dive a little bit deeper into some of the session activity. So this is a chart of light sweet crude oil. It's a 5-minute chart, so meaning each candle represents 5 minutes of price action. So it's a 5-minute rotation for those of you who are more familiar with that terminology. You can see the market here pushed and made a high roughly at 6:35 in the morning. I was not present. Okay, I'm just telling you what I observed simply when I came to the market. So we placed a slightly higher high here before failing, and as you can see on the cumulative volume delta, there was a divergence here in the delta, right? The volume delta. So cumulative delta had a divergence. We placed a slightly higher high, placing a lower high here on the cumulative delta, right? So that told me, hey, I should be aware that we could have placed a top here, whether that be temporary or permanent. There's a divergence, and that divergence would lead me to believe that perhaps we could very well be making either a short-term or significant top, right? Price pushed down here, right here, very specifically at this 710 candle when I was present. This had a positive delta of 5, right? And there was a trap delta of 48, almost 10 times. Right, so that to me said, hey, there's a good chance here that the buyers are going to get stuck and price could continue lower from here based upon this cumulative delta volume divergence here based on what I just explained. So I said to myself, well, if price is going to get jammed up here, my next level of interest puts me down here at 81.26. Specifically off of some prior price action I identified and at the session VWAP as well. So I took a short here at 710. I took my profit here at 81.26. Nice little push to the downside. I was very content. I took my entire profit there because I was concerned that at the session VWAP we could get a significant reversal. Well, we did reverse essentially back into where we fell from, and then the market continued to sell off relatively aggressively. I was very happy with the trade I took. It was very calculated. It never went against me for even a quick second. It pushed right into my profit target. I've shared this with you guys in the past. More often than not, I'm a one and done kind of guy. If I have a successful calculated trade, I just take it and I step away from the market. And that's what I did, right? I took my trade early. I had locked in my profits before the session even started. I had a cup of coffee. I was very, very content, right? So I just left it alone. Market does pull back to that area, and I told my traders at this point we're together, right? This is after 8 o'clock. I said, listen, if we continue lower from here, these are the levels that I believe we could find support. 81.16, 81.26, which is where the session VWAP roughly was. 81.16. Below that, we were looking at 80.97. Below that, we were looking at 80.77, and then below that, even a little further, we were looking at 80.67. So there were downside targets here should we break this trend line, and we ultimately did. We fulfilled all those targets. After the opening bell here, we retraced pretty aggressively, and I really loved this pullback. Now, what was transpiring a few moments beyond this pullback? The inventory report. Okay, I'm not a big trader of the inventory report. If I'm already in a position, I've already taken profits, my stop is advanced into the profit, then and only then will I hold through an inventory report. Or any economic news release for that matter. Okay, that's just part of my trade plan. Other people may feel very differently. If we weren't getting the inventory report, would I be very interested in trying to short here? Yes, right? And I'm not just saying that because it worked out. I would have felt very inclined because we were at a significant trend line that provided significant support. You could see we broke that trend line, provided a really aggressive push through these prior lows, right? There was a really good chance that we were going to come in here and place a sequentially lower high. And that's exactly what we did. Now, it was accelerated by a inventory report that did show a build beyond the forecast. So the market sold off and pushed to new lows. And I told my traders, listen, we should push to levels that we've tested and beyond. We pushed here as low as, I think it was 80.23 roughly, 80.20. And we've retraced back to an area where I felt pretty confident the market could continue lower, but I was done for the day. Today was one of those one and done sessions. I just took my trade. I was happy. I just had no desire to add any other exposure to the market today. That's how I felt, right? Like, when I feel that way, that's the way I am. I was done. So I want to get some videos out of the way, some content built, some emails written, and then I'm going to pack it up for the day. I got some other things I have on deck to do today. So this is how I played it. It was just this really great calculated push. Cumulative delta divergence, which exhibited a potential top here being placed, whether it be short term or session top. Turned out, at least for the moment, to be the session top. And then I had a delta of positive 5 in the 710 candle with a trap delta of 48, almost 5 times the candle delta itself. That to me told me, hey, these buyers might be trapped. They in fact were, and the market pushed into my next identified level, 81.26, where I took my profit and where I packed it up for the day. So bias here still looks like it's to the downside, still looks like we're making sequentially lower highs. If we break this low, we'll probably test $80 if we push through $80. Higher time frame, we could be continuing to push a little bit lower from here. There are plenty of levels that price could get caught. There is, at the moment, almost 100 contracts resting here on the book map into these lows. So we could place a double bottom here, but here nor there, it doesn't matter, right? When you've taken your trade, when you've decided and made a plan, like, you just stick to the plan, and that's the end of it, right? Like, that's how you have to be. You almost have to be a robot. You have to take all the emotion out of what's happening. You need to step aside and you need to go, all right, I've made a conscious decision. This is what I'm going to do. This is my plan for the day, and that's it. It's done and it's over with. The problem is traders get so emotionally attached to the money. You have to be unemotionally attached to the process, right? And that's where most people struggle, because everything you've been taught in your lifetime to do defies what you actually have to do to be a profitable trader. It just does, right? It just does. So, and it takes time and experience and conditioning to essentially get there. So let me show you what we did here on the S&P 500. The Nasdaq reacted identical. I like when the Nasdaq, the S&P are moving in harmony with one another, because it does put the odds in your favor. So right here, specifically at 8:33 this morning, we were monitoring liquidity at 55.30. Okay, so this liquidity was very important. If this liquidity at 55.30 was consumed and we were able to push through it, we were going to push through and into these stacked pivots down here. Okay, conservatively speaking, there's no harm in taking the first bit of profit here. This was almost a 4-to-1 trade, risking about 9 ticks here, trying to take profit at about 35. We did push into those stacked pivots, which would have given you roughly 39 ticks with a little more than a 4.3 to 1 risk reward. But listen, I am all about being conservative, being careful, being cautious. 35 very predictable ticks here to the downside on the S&P 500. Okay, really nice, really clean. All we were doing was looking to break this liquidity, right? Consume the liquidity at 55.30, and then just see a push through, right? We had higher time frame momentum here intact. We were developing momentum here already. Just simply looking at the price action, all you got to do is say, hey, call a 5-year-old to your computer screen and go, is the price going up or is the price going down? Right? I mean, most people overcomplicate this process. The price is going down, right? We're making lower highs, we're making lower lows, right? And simply put, here is where the push happened. Now, do I advocate trading with this stuff on the screen? Absolutely not. right? I tell people all the time, you should be trading on a raw market screen, okay? We use this as a reference to look at pivots, look at momentum, look at volume, things of that nature. The only thing you should have on your trading screen and your terminal that you are actually placing your trades on is volume and price action. Again, I'll show you mine. What's on here? Volume and price action. That's it. That's all that's there. All right? I have cumulative delta on the top. I have volume on the bottom. I have delta on the bottom. This is price action. This is volume profile. This is volume. All right? This is all I need to trade with. That's it. All right? I have reference charts, and everybody should. All right? I have order flow on another screen and whatever, and that's all fine and well. But when it comes to making decisions, when it comes to doing your own analysis, it should be volume, price action, and whatever drawing that you decide to put on there to make decisions around. You can see all the drawings I put here, they played roles as support or resistance at some point in time. And all these drawings were done before all this price action occurred. All right? So, I hate to say keep it simple, stupid, right? Like the KISS method. Keep it simple, stupid. Because that's really what it needs to be. You need to be able to see the clarity. You know, without all the stuff on this chart, it's very easy to see price is doing what? It's moving to the downside, right? And when I just simply put it back on here, now I see my VWAPs, I see my moving averages, I see my MACDs, I see my volume, so on and so forth. But we were targeting liquidity to be consumed at 55.30. That's what happened. We expected the market to push. It did. It pushed right into these stacked pivots before starting to reverse, right? And that is what it is, and now you can see it's just kind of chopping around here after the opening bell. Now, looking at the Nasdaq, same thing, right? We came in here at the same point in time, consumed that liquidity, we pulled back and retested this pivot really nicely. We were watching this pivot here on the Nasdaq specifically as well. So you got 200 ticks here to the downside. So if you're a Nasdaq trader and the Nasdaq and the S&P are both trading in harmony, right? The S&P consumes significant liquidity. There's a good chance if the S&P pushes, the Nasdaq's going to push as well. Well, they were working in beautiful harmony this morning, which doesn't always happen, but when they do, I believe it puts the odds in your favor. If you go, you know what, Anthony, 40 ticks or 35 ticks on the S&P doesn't excite me, well, 200 ticks on the Nasdaq should. Right? And my open statement to my clients was, hey, listen, if the S&P does what we anticipated to do, the Nasdaq should do exactly the same. And it did. It pulled from this pivot here to this pivot here in harmony with the S&P pushing lower. So, again, if 35 ticks doesn't excite you on the S&P, 200 ticks on the Nasdaq should. Right? And they worked perfectly. And then, and only then, do I feel like the odds are in your favor when the Nasdaq, the S&P are doing things in harmony. You can see here, right, we've got double top, market's pushing lower, 15-minute momentum, 3-minute momentum, below all the fast moving averages, below both VWAPs. Got a nice gap from this pivot to this pivot. As the S&P pushed through that 55.30 liquidity, the Nasdaq followed suit, pushed a whole 200 ticks to the downside into this pivot, which we were targeting. So it doesn't matter which market necessarily you are trading. It ultimately comes down to where your comfort level is, and you decide what works for you, right? Now, as I've shared with many of you, I've committed to trading crude oil because I want to significantly increase my risk exposure, right? So some traders like to trade multiple markets. I've chosen to trade one. We analyze crude oil, gold, the Nasdaq, and the S&P. Preferably when the Nasdaq, the S&P are working in harmony. I feel like the odds are put in our favor, right? Crude oil is less exposed to economic data outside of its inventory report, which comes out Wednesday at 10:30 a.m. Eastern Standard Time. We trade gold. Sometimes it's in harmony with the Nasdaq, the S&P. Sometimes it's inverse. Sometimes it's doing its own thing. But gold does get more reaction to other economic releases, where crude oil is a little less exposed to some of the other economic news releases. But that's how we did it today. Those were really kind of the things that we identified. We talked about this push here on crude oil after breaking this trend line, which perhaps some of my traders took part in. That was up to them. I had decided after I did this earlier in the morning that I was done. I took profit as we were getting together. I was concerned that we could reverse here. We didn't. I would have, again, as I mentioned, this is not hindsight. It's just that I liked this correction here into this trend line that had proven multiple times to be support, that it could have become resistance. I would have acted upon it had it not been into the inventory report. And then the Nasdaq, the S&P just worked in harmony. I mean, that was a one and done kind of trade as well. 35 ticks on the S&P, 200 ticks on the Nasdaq. Highly predictable. It was just a matter of consuming that 55.30 liquidity and letting the market run its course, and it did it beautifully. So hope you guys enjoyed this video. If you learned something, feel free to leave a like. If you'd like to leave a comment, I'll personally respond to it. If you have any questions, I'll leave my email below. If you'd like to join us live every day and access all the analysis broad marketly that I provide, there will be a link below this video for that as well. I appreciate you being here. God bless. I hope you have a wonderful day, and I will see you in the next video.